oil news from BlackBull markets. The Canadian dollar strengthening. That's been the tone of the market over the last few weeks, few months, but more so ever present in the last week, and especially in today's trading day where we've seen the Canadian dollar reach 3-year highs against major counterparts. This is the Cad Yen behind me. We're going to be looking at a key top that price is approaching, but also the dollar Cad 3-year high against the dollar for the Canadian dollar. Why is this happening? Well, firstly, Goldman Sachs came out today and predicting an $80 per barrel oil by 2021. They're expecting economic resurgent demand for oil, especially as people get back into work, get back into traveling, flying, etc. A lot of expectations for the oil price to rally. Off the back of that, we saw Wti Crude Oil go up to $64 per barrel, and that's a 6-week high. So we'll have a look at Wti Crude Oil shortly, but I want to touch on Cad Yen first. Off the back of this move higher to the 88.18 cent mark, which also came in line with that Bank of Canada announcement initially earlier on this week, rather last week, where we saw the Bank of Canada, of course, a bit more of a hawkish statement, expecting a rate hike sooner than the Federal Reserve, caused that initial spike. We had a consolidation phase already, the Cad Yen operating at those highs, and then a break in yesterday's trading session, leading on to some serious buying momentum throughout the trading day. Now, if we look on a 4-hour time frame, we can see it's becoming pretty toppy around this 88.20 cent mark. Of course, we saw that high here earlier on in April, and it was an interesting pair because we are getting some yen weakness as well. Daily chart, similar topping pattern here at this high. Weekly chart, let's see if we break 88.20, which could well be on the cards. We could enter a new trading zone in the CAD against the Japanese yen, heading up all the way to the $91 mark. So that's one chart to watch. Now let's switch it over to the dollar CAD. Now, USD Cad has been on a lot of people's charts because of that significant slide to the downside. We've been analyzing this for a long time now throughout our videos over the last months, and the prices have kept continuing to the downside. Sellers coming in, taking out any high that they are watching on this pair at key psychological levels, of course, at that 130 mark initially, 128, and then more recently 126 and 125. All of those levels have been taken out, bringing the dollar CAD to those 3-year lows, with the CAD really strengthening at that 3-year high, rather 123, just above 123 we're sitting, and that comes in line with this baseline of these monthly candles going back to November 2017, and we can see that a break of this 123 could well lead the Canadian dollar down to 120 as a possible target for bears to continue to aim at should this momentum continue and the trend continue to the downside. So if you are looking at this, you really want to be careful trying to pick bottoms, because you could be subject to catching that falling knife trade and causing yourself some harm. So really potentially looking at some sort of retracement back up to the upside, and then potentially for it to hit back down again to that 120. When you see a trend that's fast moving to the downside, you're more favorable being on the trend facing side rather than going against the trend. So that's one thing to note about the dollar CAD. Of course, massive slide. Let's just look at the daily price, the price action today, and you can see again just momentum taking this market to the downside, slowly grinding lower throughout the course of today. Now, quickly touching on WTI crude oil, we mentioned Goldman Sachs's forecast hit $64 a barrel earlier on in the trading session. Now we're currently just around the 63.5, but if we do look at the weekly time frame, we can see that we are currently operating at the top end of this trading range, which ends around the $64-65 per barrel mark. But you know, the crude oil market, right? It is supply controlled, and of course that's done by OPEC. Real drivers of this are the demand factors. So if demand does increase, we could easily see these targets here to the left be taken out, and that's your next real target for the bulls to aim at. and that will put you in this new trading zone above $67 a barrel, heading up to $75 a barrel. So charts to the upside do give nice targets for the price realistically to come in and trade in if we do break higher, and then throughout the rest of the year could well continue to trade within this range here. So do keep in mind these fundamental factors when you're trading the Canadian dollar, especially given all this Canadian dollar strength. You really want to try and trade safe. If you're going against the trend, try and get onto the right side of the trend, pick those highs or pick those lows, depending on your risk management strategy, of course, but do keep in mind that the Canadian dollar is extremely strong and that momentum does not look to stop. So do trade safe, and hope you enjoyed this video.